Did you see the Indian markets hit an all-time high again today? There's a lot of optimism and positive energy flowing into India right now. But we're not here to talk about the Indian markets. Today, our focus will be on China. Over the past 30 years, China's economic growth has been fantastic. They lifted their economy from low income to upper middle income status with consistent high growth. Now, just to give you a quick comparison, in 1980, the per capita income of both India and China was almost equal. By 1990, China was slightly ahead of India. Now, fast forward to now, and China's per capita income is around $12,000, which is much higher than India's. However, China's economy has been facing some challenges recently. And if you do a quick Google search, you will come across hundreds of articles, opinions, and research points on China's growth slowdown. Now, let's talk about this with data. In Q2 of 2024, China's GDP grew by 4.7% compared to the previous year. And this number was both weaker than expected and slower than the previous quarter's figure. And this growth rate also puts the Chinese government's official growth target for this year, which is around 5%, in doubt. Now, comparing this to India's growth, we see a different story with the latest Q1 GDP growth rate at 7.8%. So what's been happening with China, the manufacturing powerhouse? Now, let's talk about this with three important data points: property, trade, and consumption. The property sector is a huge part of China's economy, making up about 25% to 30% of it. Now, the sector is deeply connected to other parts of the Chinese economy too. However, the property sector is currently going through a crisis, and all of this started with the default of the biggest property developer, Evergrande Group, in 2021. Now, Evergrande reported over $300 billion in liabilities, and earlier this year, a Hong Kong court ordered the liquidation of the company. And this sent shockwaves across China and the world. Now, this crisis quickly spread to other real estate developers in China too. Now, in June, new home prices in China have fallen at the fastest rate in 9 years. Property investment in China has also fallen by 10.1% in the first half of 2024 from a year earlier. Now, these numbers shows us that the property market in China is facing a downturn, impacting Chinese developers who are dealing with heavy debt burdens, sluggish demand for new property, and home buyers who are focusing more on savings during these tough economic times. And this drop is also happening despite the government's efforts to support the sector. Now, coming to exports. China's exports grew by about 8.6% last month, the fastest pace in over a year. Now, this is a positive sign, but there are some challenges. Now, rising trade tensions with the US and Europe does pose potential threats. Additionally, China's imports fell due to weak domestic demand. Now, the government is trying to boost consumer spending. However, indicators such as retail sales only grew by about 2% in June compared to the previous year, well below expectations. Unlike many other economies also battling high inflations, China's inflation rose only by about 0.2% year over year in June, with growth remaining low or negative over the last 1 year. So the recent economic data does indicate weaker growth on the demand side for the country, which simply means that Chinese people are not consuming as much. Now, looking ahead at the Chinese economy, both Goldman Sachs and JP Morgan have adjusted their predictions for 2024. Goldman now expects China's economy to grow by 4.9%, down from the earlier forecast of 5%, while JP Morgan predicts growth of 4.7%, down from 5.2%. Now, understanding where China's economy is heading can be tricky. Some signs suggest that the slowdown might be temporary, but some signs say that it could be a deeper, more structural problem. Now, for now, all eyes will be on Beijing. Right now, as we speak, Chinese leaders are gathering for a crucial meeting known as the Third Plenum from July 15th to 18th. Now, this meeting is expected to shape the major economic and political policies for the years ahead for the economy. And this particular meeting will be closely watched for any decisions on economic support. Now, China plays a huge role in the global economy. Since joining the World Trade Organization in 2001, it has become a major player in global trade, even surpassing the US in some aspects. Now, many big companies like Apple and Tesla manufacture their products in China. And if China's economy does slow down, it could affect global economic growth. Now, for India, China's economic challenges brings both risks and opportunities. Now, India's trade with China has grown significantly over the years. In fiscal year 14, about 10.7% of India's imports came from China. By fiscal year 21, this had risen to 16.6%, though it's now around about 13.8%. Now, this dependency still means that any disruption in China's economy could impact India. However, the situation also presents an opportunity for India. The country can look for imports from other nations, reducing its reliance on China in the long run. Additionally, India can also focus on building its own capabilities to manufacture these products domestically. For instance, India is already seeing benefits in certain areas. Just today, there was an article about Apple assembling more iPhones in India as a part of their shift away from China. Now, it's important to know that India is not the only country seen as an alternative to China. Many nations like Vietnam, Thailand, Malaysia, Indonesia are also vying for a share of China plus one pie. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.